Vincenzo's Go Crypto Investing this September the 17th, 2025. Fed day volatility warning week. Crescendo coming to play later on this afternoon as the multi-day Fed meeting will have the on-game result of the Fed's monetary policy. Will there be changes? Are the rates going to be lowered? The market is baking that in with greater than a 90% chance at least a quarter basis point rate cut will take place this afternoon. We've had a volatility warning in effect since Sunday, and we've been talking about what could be potentially brewing and potentially storming and potential tea leaves and things that are shaking and crumbling and cracking beneath the scenes as we head through the mid-2020s, and I believe heading towards a Great Depression 1928 to 1930 style crash leading into a depression into the 1930s. And we've been going over and we'll continue to go over the parallels as crypto is now infected into all other assets, good and bad. Good when it goes up and bad when things go down. But you can see right now the Bitcoin price with the volatility warning is just above the 50-day moving average, just below the 3.5 year multi-year rising support or pattern support. And you can see we're currently just below it right now. If we go into the hour time frame, you can see we've been staggering and trading up and sideways along it, waiting for the Fed meeting. And option one is the market loves and salivates what the market does today. And off that salivation and love, it has a gigantic pump. And it would be a pump back firmly within the 3.5 year rising channel, something like that in yellow, approaching the all-time high of 124,640 and change. Or it's not going to like it, and it's going to end up, after jockeying around today, and as the news comes out, it's going to end up down there between the 200-day moving average at 105,238.05 and the major underneath support of 95,703, and that's a big move to the downside. Say it ended up in the south route, not Canadian. That is a 17% move to 18% move to the downside, right? So it's going to be very active today. We're going to stay on top of this for you. You just got to wait and see how the markets react initially, which will spike either north or south. And then at 3:30, when the Fed takes questions and they get to feel and to talk and to speak and the language, most importantly, the language of the Jerome Powell, so they'll understand and get a feel what next year's monetary policy will look like. That'll drive the price the opposite way after. But we'll see which way and how the market takes. And if there is a stunning development today where the Fed doesn't do anything and they keep the rates the same, you'll see a big sell-off in the commodities market, a sizable sell-off in the stock market, and I would suspect a sell-off in crypto too, as well as a big pump in the US dollar, right? If they don't lower rates, because everyone's thinking they're going to raise them. The markets have overbuilt in. I think even if they lower a quarter basis point, you could have a slight sell-off in, say, the bullion market, the stock market, and even the crypto market, as they've overbuilt into the bullish factor on how dovish the Fed's actually going to be this early. You can see the Ethereum price is sitting and consolidating just off the triple top and an all-time high of 49.60. And what we're watching for, if the volatility goes south, you're going to come down to the neckline support, or the megaphone neckline support at 41.04, which is just below a rising daily time frame moving average. And you can see the 50-day is now significantly above at 42.11. The 100-day is coming close now to the 4100, and the 200-day is getting close to the top part of that support and resistance box. So that would be where you would look for if something fails to the downside. An initial hit on the 50-day right along the pattern support breakout area of 4104. And any kind of bearishness, if the market takes this bearishness today, you could come all the way down to the 100-day moving average and at 34.76, top part of that green support and resistance. If the market likes this as bullish, you're going to look and it would establish well into the $5,000 range. You'd be looking at maybe a $5,300 over the next 7 to 10 days. So we're going to watch out for this. And we're going to continue to stay out ahead of this, as this is a very important day today. The XRP is even. The XLM is slightly up. If we take a look at the gold, the US dollar is up slightly today. Gold futures are down slightly today. Silver is slightly down at 1%. Gold spot price is fairly even. And the markets are, some are up, some are down. The ones that are down today were slightly up yesterday. The ones that are up today were slightly down yesterday. And if we look at some of this comparison that we've starting to look at and continuing our education, 1920s boom, known as the Roaring 20s. I repeat, the Roaring 20s, rapid industrial growth, rising stock market, mass consumerism. Sound familiar? We have mass consumerism buying, stock markets blowing through the roof, and industrial growth is not rapid. New technology, automobiles, radios, telephones, economic expansion, easy credit, a big thing, easy credit, and speculation-fueled markets. Same thing as we have now. We're going to go back to very cheap money, even though we're still very cheap now. Easy credit and speculative-fueled markets are what we have now in the EV sector, the tech sector, the chip sector, right? Rising inequality, but broad cultural spreading of jazz age urbanization. We have rising inequality now. 1930s crash in the present, the 29 Wall Street crash, and that's what I think is going to happen here as the 2020s go on. Triggered financial collapse, over-leveraged banks and households, which we have now. Global trade slowed. Tariffs, proclamations, which we have tariffs now, resulted in a Great Depression, unemployment, soaring deflation set in, widespread poverty. And what came out of that in the 1930s was the New Deal and the U.S. government starting to fiscally print, expand into all assets of the economy, had wage and price controls. We had bread lines because of government intervention, which made the 1930s much worse and turned it into a Great Depression. If they would have just let the free market work its way out, you wouldn't have had that dynamic Great Depression during a 10-year, 15-year span in the 1930s, because the government made it worse. The 2020 parallel, similar to the 1920s. Boom phase, 2021, easy money policies, near zero interest rates, stimulus checks. Yes, there was COVID, but that was the same as what happened in 1920. Record high stock market and housing values, same thing that happened in 1920. Rapid adoption of new tech, AI, EV, crypto, like in the 1920s, cars, radios, and expanding infrastructure. Cryptocurrencies, meme stocks, NFTs, echoes the 1920s speculative bubble. Inequality, wealth gap widens sharply, much like the 1920s. Crash risk in the 2020s. Rising interest rates to fight inflation, strain credit, real assets and businesses, debt, because we are a debt-based economy now and we're so far in debt. Even the smallest correction, I repeat, the smallest correction down will make banks go bankrupt, like Silicon Valley Bank and a couple other ones 2 years ago when they were fighting inflation and trying to monetary tighten, and they knew they couldn't do it, and the first two banks went under, so they stopped, right? Debt level, government, corporate households are historically high, vulnerable if credit tightens. Global trade tension, supply chain fragility, parallels with the 1930s. Climate shock and geopolitical instability and stressors not as dominant in the 1930s, which we had we had one of the worst droughts in U.S. history and one of the worst heat waves of the in U.S. history for a 10-year span in recorded history. Governments and central banks today are much more active in backstopping markets, stimulus, bailouts. That's just government printing, which heightens inflation, which loses purchasing power, eats up the dollar, and enhances and exacerbates and puts a feedback on the problems that are already there. Social safety nets, unemployment, welfare, food programs, all exacerbate the problem by raising debt, printing money, expanding the money supply, and shooting inflation up. Those are all inflationary. Those do not reduce risk of poverty. Those increase risk and poverty, and those right there are some of the lies that are spread by the government. Technology sector is a major growth driver amid downturns, right? So it's very interesting, some of the parallels that are going on there, and we're going to keep educating you on that because I feel it's very, very important, because I think it's going to happen, right? And that's why I have cash. I always have cash. I sometimes regret having so much cash in bonds and CDs short term, but I won't regret that when the day comes, when I know it's like they have time and time again, where we have a big sharp crash correction crises, and cash will be king in a short-term time span to buy assets very cheap, right? And that's very important to understand. The AMP, if we take a look at this, is coming down near a depressing state. We've been telling you it's been getting repeatedly beat down. If we break this 2.5-year pattern support at 0.00312, it's going to come down to the 0.00236, and that would be catastrophic. I repeat, that would be catastrophic. But what we need to have happen here, and what's been happening and what I'm hoping will happen again, not hopium, but just seeing what's happened, even though we could be breaking down the wall of support here, is you get bounced on here again, and one of these times you can breach back with enough fortitude, enough resilience, enough buyers, enough stamina and force to breach back through that and then really start a more meaningful uptrend. But over the last 6 months, since December of 24, the overhead moving averages have just been too strong. I repeat, they have just been, the overhead moving averages, too strong, right? And you can see where they're at. They're steadily, in an orderly fashion, declining. That's why you're either going to have a massive breakdown to the downside or you're going to have a massive breakup to the upside. An AMP, but only time will tell. The DGB is in a similar area, steadily declining moving averages below the 0.00838, and you need to be above that and these three moving averages that have been, again, just like the AMP, because they've been running together, making it bearish. And if we can't get some support and get back above and sustain those moving averages in that horizontal yellow, you're going to end up back at the 0.00557, which I don't want to see happen. You don't want to see happen. Nobody wants to see happen. But if it does, buy more. Same thing with AMP. If the tanks, buy more. Because I believe these two coins next year and into 2027, where the crescendo max peak happens, I believe we're looking at a 5 to 15x return from where the current price is in both of these coins. I am not a financial advisor. I am not getting paid to tell you this. These are just my own personal opinions, and I do have $5,000 in the game, skin in the game, in DGB and AMP combined, right? We're about even on both, slightly down on AMP, but about even on DGB, because I've been buying all down here, and I will not sell, and I do believe that these will skyrocket next year and going into 2027. But I'm just giving you my own opinions on what I'm doing. I'm not a financial advisor. I'm trying to be an asset millionaire. Crypto is only less than 3% of my net worth is in crypto, right? Some will say that's good. Some will say that's bad. I took profits and bought more gold, but a vast majority of my net worth is in real estate, gold and silver, bullion and mining stocks, and 401k investing, right? And cash. But we're well diversified because we have crypto, we have gold, we have mining stocks, we have 401k, we have cash, we have bullion, right? We're all over the map. We got all kinds. We have real estate, right? We got every asset that you can imagine. And we just need to keep growing them. The XLM, though, you can see is sitting just below the 50-day moving average in the daily, and it's trying to get squeezed back where it was. But what we're going to watch today with this hyper volatility, and this video is getting extremely long and I'm going to let you go, is if we get bearish and we get back down and can't get back above the 50 and it instantly slip bearish, you would look at this 36 cents to be a major short-term underneath support, right? And you would look for a bounce. Now, if we breach that, you would be looking at a more substantial fall to the downside. Come on. It's clearly not what I'm grabbing. Where if you broke the 36 cents, you would at least come down to the 200-day moving average at 33 and potentially all the way down to that 31 cents. And that's just above the 50-day moving average in the weekly time frame. So that's what we're watching out for. The bullish option is even if you... No, we don't want to buy you. The bullish option is even if you come down and look bearish, you hold the 36 cents, you could have a big rally and a big... If they like the news with the Fed today and they get all feeling good, having a couple of cocktails, sitting on the beach like nothing can go wrong, and you could pump straight up to the 43 cents off a fake out to the downside. So that's something that we're watching out for today. We're only talking about today because it's hyper volatile today and this week. You can see the XRP is sitting below and just above the 50-day moving average, and we'll get rid of what we showed you, the bullish and bearish options yesterday. You can see we're sitting below the critical 307 major horizontal left to right resistance, short-term resistance. When you're below that, you're bearish. The bearish is you keep moving down to the 294, slip to 50, end up at the 100, slip to 100 with the news today, and end up somewhere in the next day or two all the way down here at the 50-day, at the 200, excuse me, the 200-day moving average and the horizontal 255. Now the bullish option is you continue. We don't want that. We just exited out of you. You get hold support and then you shoot above that based on the news today that the market salivates it and likes it. And then you start to move to the upside, and then it would really start to look like we're breaking out of this 2.5 month consolidation to the downside, right? Things are going to get crazy. Things are going to get wild. We'll have another video this evening to wrap up when I get out of work what the Fed did, but they're talking at 3 o'clock. I'm in the middle of work. There's nothing I can do about it, but I will make sure I put at least a 20 to 30 minute video tonight on what the Fed did, what their future outlook is, what my thoughts are on it, and how I think it's going to play out over the next 6 to 12 months in the financial sector, the crypto world, and yours and my financial well-being. Peace and love. Remember, it's as cheap as $3.99 a month. It starts at to support the Jabroni Killers. It's in the video description and or pinned comment. Become a member. Hit that free subscribe button. It doesn't cost you anything. It helps promote us and move us through the YouTube algorithm to get our education, our information, truth, and trust out. Most importantly, to more and more people, to help them become an asset millionaire like I've helped myself to become on my way to an asset millionaire and beyond by steady investing in the 401ks, cryptocurrencies, slight amount, gold and silver bullion and mining stocks, cash and short-term CDs and bonds earning a minimum of 3 to 5%, and real estate, because we buy asset appreciating things, which means they go up under a dollar depreciating world, which we are chronically in, and we have been in my whole life. And the sooner you understand that, the sooner you'll start making money, and the sooner you'll take your income and invest into things that go up and the assets that appreciate as the dollar chronically is assaulted, and you'll stay out of high car payments or car payments altogether. You'll have a budget. You'll stay within that budget and live 25% minimum below what you take home on your paycheck, and you'll use that 25% that's left over because you're living below your means, and you will steadily invest it on top of what's going in to your 401k or your pension. Peace and love, the Rock's Eyebrow, and we'll continue hammering how to become an asset millionaire together. Jay.